JetNet IQ is a market research and forecast service that uses a proprietary database reflecting the views of business aviation owner and operators in 129 countries. So please join me in welcoming Rollie Vincent.
Thank you, CBAA. Thank you, Waterloo, Kitchener-Waterloo, for the invitation. We're delighted to be here. For me, starting in aviation back in Montreal some years back, my dad was an A&P at Air Canada, and I guess I got the kerosene in the veins many years ago. So delighted to be here. It's an honor. Thanks, Rudy, for coming back and leading this organization. JetNet IQ, what is IQ? Well, first of all, it's a collaboration of two businesses. We're privately held, independent. We don't have stock prices, so we kind of do it and see it like we say it, okay, and vice versa. Rolland Vincent Associates, our organization out of Dallas, Texas, and then JetNet out of Utica, New York. We've come together to create something called JetNet IQ. Now, what is IQ? IQ obviously means intelligence, but beyond that, it means independent and quarterly intelligence. So we're in the markets all the time. In fact, I'll share some results with you from 65 owners and operators here in Canada who've responded to our surveys. We'll share with you really the mood of the market. It's actually very good. If there's one thing you remember today, after I get off the podium, is the market is actually very good. We've been monitoring things very closely for the last 7.5 years. We've never seen the markets as optimistic as they are right now. Okay, never seen this. So we're quite pleased with that. The outline of what we're going to discuss, really there's 4 sections of the outline very briefly. Supply and demand, you know, I'm an economist really by early training. Our industry, what are some of the indicators in the industry? What do we see? And we'll tell you what we see, and in some cases there's a few things we're watching that are not necessarily as optimistic or positive as other. Owner-operators, I mean the customers in the room, the voices of the customer. This is really where we started with JetNet IQ. We wanted to amplify the voices of customers, the people who own and operate airplanes. So at the core of our IQ product service is the owner-operator opinion. I'm going to share those with you. And then our delivery forecast. We've been doing this for many years, business jet delivery forecast. We've started a turboprop forecast as well. And others tell us that we're the most accurate in the industry in the last 6 years anyway. Very, very accurate forecasts. GDP, everyone knows GDP, gross domestic product. We'll look at a couple of the markets here. I've got US and Euro area up here. And you can see this is over time. You can't maybe read all of that, but you'll have access to all of these slides, so don't worry about all the detail. The good news is, and I don't know if you can see those slopes, but we're looking at pretty positive trends here. These are quarter by quarter annualized numbers, really nice numbers here. These two regions here represent 74% of the business jet fleet worldwide. Layer Canada into that as well, we'd probably be 76, 77% of the markets. Okay, so the good news is lots of growth. Europe went through a double dip recession, as you can probably see up there. When we go below the line, that's a recession, and that's over time. The big, deep area of depression almost was in 2009. Look at this slide here. The height of the bar is the number of aircraft that are based there. This is business jets. So you see this is a very underdeveloped market. These are the top 20 markets in the world, top 20 country markets for business jets. Height of the bar is how many aircraft are based there. There's one country, I'll let you guess which one, is fairly dominant in this industry. In fact, around 60% of the aircraft are based in one country, and other countries come after that. Mexico, Brazil, Canada, UK, and Germany, and followed by China. Those are the big 7, if you like, 6 or 7 markets, representing around, I think, 80%, a little over 80% of the fleet. So if we look at this business, we can say it's very underdeveloped. And what do we mean by that? Countries and regions are only just starting to discover business aviation and the benefits of business aviation. Canada, of course, has been a long-time user of these aircraft, these types of aircraft, and I think more and more we're going to see growth here as well. But generally speaking, that line that you see snaking across from left to right, that's the GDP growth rate expected in 2018. So we'd like to see 3% or more, typically, 3% or more. Only 4 countries right now of those top 20 are expected to grow really quite reasonably fast this year, including Malta, of all places. Inventory for sale. If you went to a used car lot and there was a lot of cars on the lot, you'd probably not have to pay very much for those cars, right? right? The salesperson would be very eager to have your business. Well, what you're seeing here is the number and also the percentage of the fleet that's available for sale. Blue is jets, green is business turboprops. We've been seeing a consistent improvement, if you like, in the inventory for sale. Lower every year, lower every year, lower every year. In fact, last year, quite a dip down. We had quite a few transactions. So if you're a broker dealer, any of them in the room here, you probably had a very good year last year. Now that said, 2018 we think might be a little slower for you. Why? We've really depleted the inventory. There's not as much good inventory, fresh inventory for sale. So we're going to watch that. And these are just some other data numbers, data that you can see. The little line on the top is the percent for sales now. Tracking around 9% of the world fleet of business jets is for sale. That's actually in a pretty good place. It's lower than it's been for many, many years. And the days on market you see up there on the red bars, that's how many days it takes for an aircraft to transact. Still running around 300 days worldwide. JetNet tracks this and monitors this every single day. Okay, what are we looking at here? The blue line is the number of transactions. That's the number of aircraft that have sold in the pre-owned market. Why do we look at the pre-owned market so much? It's very active. We can see it daily, what's going on. If we have to wait for the quarterly reports from the OEMs, for instance, to know, how their orders, deliveries are doing, it's a bit of a lag effect. So we actually look very carefully at the pre-owned market. It gives us a nice pulse. Blue means transactions, aircraft transacting, whole retail. And the red is the number of aircraft for sale. So you start seeing those diverging lines, see the crossover that happened a few years ago. We think these are good health indicators for the market. Okay, we like what we're seeing. You saw that uptick in 17, see that blue line go up? That emptied a lot of young inventory. So right now if you're looking for a pre-owned aircraft less than 10 years old that's only been flown on Sundays at the Waterloo Airport and kept indoors in that beautiful chart right hangar, as they say in Quebec, bonne chance, mon ami. Okay, there's nothing out there. Here's the number of business jets that have been delivering worldwide, and you see this, you see where we've been. It's a very cyclical market. Anyone who will tell you otherwise is not paying attention. Okay, but if you look at the last 6-7 years, I don't know if you can see that, but you see those lines have kind of flattened out. We've been in a flat sort of environment, kind of a doldrum, if you like, in this business aviation world. Now that's just totals. You have to look at the details to really see what's going on. But we're in a bit of a flat market. We expect that flat market to continue again this year at around 650 business jet deliveries worldwide. Now, if you're in Montreal or Savannah or places, Wichita, you're getting a little bit nervous about this. But part of what's going on is the OEMs, the manufacturers, are retooling. They're coming out with new product. They're actually quite delayed, most of them. They don't like to tell you that. But they're mostly delayed in bringing out new aircraft. We're looking at delays in certification. And that's really causing some of this doldrum, which is, hey, I like the new product. You sold me on it. I love the brochure. Where's the airplane? It's not certified yet. Had the pleasure of being in Geneva a couple of weeks ago when Bombardier invited us to the rollout of the Global 6500. We had actually predicted that aircraft a couple of years ago in our reports, if you're subscribers to it. We just didn't know when and where they were going to do it and who was going to pay. We figured out who did end up paying, and that was Rolls-Royce. Okay, here's the OEM deliveries over time. This is the big five. We do a lot of research on what we call the big five OEMs: Bombardier, Dassault, Embraer, Gulfstream, and you see Textron up there as well. This is kind of the where they've been going. You see the height of the bar is how many aircraft they've been delivering new from their factories in the last bunch of years, and where we're at right now. We expect the deliveries to stay around 1% to 2% higher in 18 than 17. That's our current forecast. We've been very accurate. Now, if you look at backlogs, what is a backlog? Well, it's an order that was taken at some point in time that's to be fulfilled. It's a firm order. And there's really, you see the declining backlogs in the industry. This is the big five, again, OEMs. We track these guys because they represent 90% of the market. But they're also publicly traded, so we can actually do some financial analytics on them. Overall, the industry has been seeing a declining backlog. So this is an indicator. I would say this is one of the negative indicators that we're seeing, declining backlog, meaning that orders are not matching deliveries, okay? Now there's something, terminology used in the industry, in this one and others, called book-to-bill. Book-to-bill is just a sort of a balance between what's being taken as orders into the factory and deliveries out the door. So a book-to-bill of 1.0, you see that little dotted line snaking across the page. Book-to-bill of 1.0 means that we're in a sort of a healthy balance. The factories are matching the demand, the outgoing demand. Okay, so anything below 1, so anything underneath that little dotted line there, suggests that backlog is being burnt off. Okay, and you see most of those, these are the big 5 OEMs, almost all of them. In fact, there's only one that's hitting 1.0 book to bill right now, and that's Textron. Now, that looks very good for Textron, except when you realize, and I'm going to go backwards here for a slide, Textron is that little red area at the top. Can you see that? I can't. Can you see it? I can't see it. What that represents is around 3 months of work. I spent 8 years of my life in strategy at Cessna, and if we had 3 months of backlog, I wouldn't be sleeping, okay? So we're looking at the largest volume manufacturer in the industry. They represent around 40% of the output in a big year that has 3 months of work committed in their factories. Okay, so if you're looking for, if you're if you're going down to an OEM conversation in Wichita, you actually have some leverage. Okay, there's only 2 OEMs that actually have any backlog to speak of. One of them is based in Montreal. You might have heard of them, Bombardier, and then the other one's based in Savannah. You might have heard of them, Gulfstream. But between those 2, they represent a good chunk of the existing order backlog. The others are kind of a little weaker on that point. Okay, so let's shift gears here a little bit. What are we looking at here? Lots of, you've had your bacon and eggs breakfast. Now we're going to give you some more data. What this is our ability to reach the owner-operator community. The JetNet researchers, we have 50 people in upstate New York, phone calling, emailing, contacting every day the owner-operator community, and this is really our scorecard. We try to reach 500 of them every 90 days. That gives us a very small sampling area, about 4% in our data, and the distribution on that pie chart you see, that looks exactly like the world fleet. We've spoken with and received surveys from 15,000 owners and operators worldwide, 129 countries over the last 7.5 years. No one is doing this. We've been watching. We're the only people doing this, so we have proprietary insights into the owner-operator community. We'll share those with you. Here's how people say they use their airplanes. This is interesting. These are 50-hour time bands per aircraft, and it's fascinating. On average, we do this worldwide. We can cut the data and look at it by any region or type of aircraft operation. Around 328 average hours per year. If you're off to the far right, you're probably a charter or fractional provider, or you're BC Tel or one of these other organizations that really use their aircraft, or at least they used to. I don't know if they do still. But there are some very high utilization operations, and then but a whole bunch. I think 45% of operators worldwide tell us that they only use their airplanes 250 hours a year or less. So those hangars in FBOs around the world are probably pretty busy. If I was a real estate investor, I'd be buying airport property right now. Here's some busy charts. Basically, we look here at the bottom on your left is the Canadian mix of fleet, and you can kind of look at this. It's a little bit different from what we see in the U.S. market. Canada has a larger proportion of turboprops. At least it's based on the respondent group that we hear from. So we're going to share with you some results from this group, but just remember that we're looking at a little bit of a different distribution than we see worldwide. Maybe more turboprops here than we see otherwise around the world. One thing they're telling us, though, is that they're using their airplanes. And utilization of aircraft is probably at the core of it all. There's 2 things that have not really recovered in this long period of recovery. Utilization is still kind of low for the industry, although here in Canada we see a little bit more utilization than you see otherwise. And the orders, the rate of new orders coming into the factory, those have both not really recovered the way we'd like to see. If you look at utilization in the U.S., where we have a lot of good data, also here in Canada, utilization has not recovered on a per aircraft basis back to where it was back in 08, 07, not even close. In fact, we track around 30% of the U.S. fleet is effectively grounded. We'll talk about that afterwards, but older aircraft are not flying at all. We think there's going to be a retirement wave. It's probably already happening. Aircraft that are not flying at all. We're doing a lot of analysis on that right now to see older aircraft that are not flying, birds' nests and the nacelles, this sort of thing. Kind of fun. Okay, here's the mood of the market. This is like a pendulum. Think of a pendulum, okay? Blue is good, okay? And we have yet, in 7.5 years, we have yet to see a sentiment this positive. Now, the statement that goes to the owner-operator community is up there. How would you describe current market conditions for business aviation? So it's a pretty generic and broad statement, but it actually gives us some sort of monitoring the mood, if you like, capability. We have never seen the pendulum look so blue. Okay, so I'm going to show you on the next slide. We take that blue area, which is 68% of worldwide operators, say things are looking pretty good. We subtract the red area, which is, you know what, we're not there yet. We're still going down. That's the metric. That's our sort of net optimism, and that's where we see here on the left side. This is a quarterly net optimism index. What is this telling you? The higher it goes, the more the market is feeling pretty good. We have yet to see the market overall, this optimistic. Now, I can't, without missing something important, not comment on the current political environment in Canada and the United States. Unprecedented, shocking, as someone who comes from both sides of the border. I and many people are appalled at what's going on. As my mother would say if she was still with us, Rollie, this too will pass, but it's indigestion and it may not be pretty as it passes. We're going to go through some difficult times as an industry, but also as neighbors. I'm appalled, and November 6th can't come quickly enough. Where are we with the business cycle? This is, again, that sentiment mood we just talked about. So the higher that bar goes, or these lines go, the more the market is feeling pretty good. And we see it across major regions of the industry. North America, which for us is Canada and the US, and then Europe. I can hardly see the lines there, but those lines that are heading up, Europe is actually leading. This is interesting. Just came back from Geneva and the eBase meetings. Europe is actually leading optimism around the world. And you tell Europeans that, and they'll get into 26 different arguments in 26 different languages. They don't believe it. There's something's not perfect. Oh, of course, Brexit and other things. Sure, there's always something, right? But the good news is, as business people and as entrepreneurs, as analysts, we see these things and we like to report them to you. We're very optimistic for this industry. What are we looking at here? This is actually some Canadian data now. So we actually can tease out. We have 65 operators in Canada who've reported to us. So that red line with the little white circles kind of looks like hockey pucks there, sort of thing. See that? That's the Canadian mood, which actually really bounced back up nicely. We had, I don't know if you saw that, you see the dips where that occurred? See where the mood really dropped down? That was third quarter of 16. Does anyone know what was going on in the third quarter of 16? June to September, October, November. Brexit vote in the UK. We also had a very contentious presidential election in, I think it was the United States. Oh, yeah, right, U.S. So there you go. So that, we believe, was really drawing down these numbers. So we're seeing some really nice bounce backs up here, okay? We like what we see here. This is just some more detail. Interestingly, we've done a lot of work with the OEMs. In fact, they're clients of this service, as you might imagine. The large cabin market is still lagging. So if you're an operator of large cabin aircraft, that, you hardly see it, but that line on the lower line, the dark line, that's large cabin mood, okay? The mood is still lagging there. I remember talking to Mark Burns, the head of Gulfstream, and he was telling me, he says, Rollie, he says, we didn't participate in the recession here in Savannah. And I remember that conversation was about 2015, 2016, and I thought, oh, you will, you know, that's sort of the comment, yeah. So sure enough, what happened is that market also kind of took a dip. That's coming back up, as you can see. Here's how people buy. If they're buying a new airplane, this is a word cloud thing that we're doing. We have all the data behind it, but this is what's been selling people on aircraft in the last couple of years. We think this is going to transition. We think there's another thing coming, and it's not really showing up too much there, but we think speed is actually coming. But this is the current way people are buying airplanes. If they're buying pre-owned aircraft, price obviously is a factor, but these are, and we have all the data. Please come and see us afterwards if you're interested. But these are some of the things that are driving people when we ask them, hey, when you bought that airplane, you bought that Citation Latitude, what was really driving your decision? What was the most important decision criteria? Here's some data. We don't share this very widely, so you'll see it here. We try to keep this kind of under wraps, but we'll share it with you. This is the brand reputations of the aircraft manufacturers and some of their brands, okay? Scale of 1 to 10, where 10 is perfect. 1 is, oh my God, I need to sell this aircraft. So the longer that bar, the better. The higher, the stronger the brand. We do a lot of work on brand, and this is just one quick snapshot. This is how Canadian operators see brands, okay? So you see Gulfstream, the global is just up underneath that, and you see some of the others. This is a purchase probability, and again, you can study some of this data. About 8% of respondents worldwide are saying they're at least 60% likely to buy an airplane in the next 12 months. How does that compare? Is that a good number, bad number? It's actually a little low. We've been watching this one. We'd like to see that at least 10% or even higher. It's slipped back a little bit in the last few quarters. And if you need more insight on that, we've been monitoring this for 7 years. So right now, this is an area we're watching. Part of this is just, we think, a little bit of some of the delays going on, whether engine or airframe certification. It's kind of holding down the purchase interest, we believe, a little bit right now. But, capital deployment is another issue. A lot of capital flushing in and out of companies right now, but are they deploying it for transportation equipment? Not really. We know that. So we'll see what happens. They're replenishing their shareholders' pockets, I think, with dividends and other things. Here's some of the things that are stopping people from buying airplanes. And again, a lot of data here. But the primary thing that we're seeing is we've been in an oversupplied market now for some time. People are telling us, look, I don't need another airplane. The one I have works well. I have to get ADS-B out, figure it out, and I got to talk to Sky Service or somebody else to do that for me. But, we're all going to get there. But generally speaking, companies have been saying, well, I have enough capacity. The other issue that's been really paramount is the value of the aircraft. Residual values, of course, have plummeted. The steepness of that slope, we think, is starting to come back a little bit, but it's obviously a negative slope. So, 50% reduction in value in 5 years, that's hard to take. So that really affects your trade-in equity, if you like, what I have in my pocket when I want to go to the OEM and buy another airplane. That gap has gone bigger and bigger and bigger. And it's kind of like going to the used car lot or the new car lot and saying, look, I got my used Volkswagen and, it's a diesel and I want to trade it in on that new one. Well, the gap has just done this, right? So that's the other big inhibitor. No big surprise, but we have data on it. Here's just some insights. I'll focus on the bottom right-hand pie, small, medium, large. And a lot of people think of, you do your drive up at the McDonald's, small, medium, or large, or whatever it is, right? Here in airplanes, what are you going to buy next, small, medium, or large? The small aircraft, which is under 20,000 pounds MTOW, that's how we define it, that market segment has not picked up, has still not picked up. That's another indicator of health we're watching. We've been watching this for 7.5 years, and this affects Embraer at the low end, the Phenom, Citation, clearly the Lear brand, Honda Jet. I mean, we're waiting for that market to just, and Pilatus now, we're waiting for that market to really rebound. So we're seeing some activity there, especially with newer aircraft, but more legacy aircraft there are just struggling. We're watching, but this is, again, the voices of customer. What are you going to buy next? What's the probability you're going to do that? And they're still kind of hesitant on light jets. We'll see. Turboprops have actually done quite well. Here's some of the models that they're interested in most for the next purchase. It's kind of surprised us a little bit. Falcon 2000 showed up very nicely on some of these charts. Citation XLS, an aircraft that's actually a little long in the tooth. And they haven't upgraded the avionics. We'll watch that one. But this combines both pre-owned and new purchases. This slide, we have all kinds of data behind this. But essentially, and then, of course, everyone's favorite airplane, the Challenger 350, which just does everything so well and doesn't try to overextend on the technology side. These are all aircraft in demand. U.S. tax and depreciation law, I was asked to really focus on this as well. Hard to read this, but basically people are saying, about 20%, I think, if you add it all up, people say they think it'll have some sort of impact on their short-term operational and buying patterns. So there's some lift here. It's obviously very, very U.S.-centric, this stuff. Most people don't really care about this unless you're in the U.S. How this could affect the Canadian market is obviously the OEMs could start taking in more orders, and that may affect how much concession you can get out of them. But right now, we think it's still pretty mild. People are still trying to figure out what this law means. And interestingly, at a state level, I mean, you can get these depreciation and tax benefits at the national, federal level, but sometimes the states aren't very well aligned. In fact, I think there are 30 states that are not yet aligned with the laws. So I'm not a tax expert, and I'll refer you to a tax expert on that, but it may not be as clean or clear as we all think. Here's our current forecast. 7,800, 7,900 business jets will be delivered, we believe, over the next 10 years. This year, we're in this kind of a little bit of a flat zone, and then up from here. We're not predicting in this a recession. Clearly, the U.S. and other economies have been running on now for, almost 10 years of recovery, if you like. So there's potential for a recession in here, but that's averaged out in our forecast, as we've done in the last bunch of years. $236 billion worth of business to be done here, just on the new side. And if you look at pre-owned markets, pre-owned aircraft markets, transactions, about the same volumes, the same value, around that 200 plus billion over the next few years. Volumes tend to be about 3 to 4 times the activity. So pretty interesting market. Here's where the units and dollars are going to frame out over the next few years. This is, again, our forecast. On the left side, you see the units. You know, how does the OEMs share the business? On the right side, you see the dollars, how that's going to work out. So on that, I'm going to say that's my comments. We have the slide decks available to you. I've already provided it to CBAA, so it's there. And if we have time, I don't know, Rudy, do we have time for questions? Or I'll leave it to you. No. Thank you.